All right, everybody. It's Lat. All right, everybody here, and we're doing a special stream today with Signals, Signals.io. Special stream today with Signals,
I'm-
Signals.io.
Okay, I just muted it as well. My name is Chris. I am the co-founder and CEO of Signals. Bit about me. I've been trading since I got out of college in 2008. I worked as a commodities trader, Series 3, Series 34, Series 30. Basically, from 2009 to 2011, I started working at a company called Vision Financial Markets in 2011 as a branch manager for a while. And then after that, I got hired at a company called Paramount Management Group, which was FX boutique shop. And it was at 30 Broad Street, which, if you know New York City, is right around essentially across the street from New York Stock Exchange, which was right near the first Bitcoin center that opened up. And that's how I got into Bitcoin. And ultimately, the rest is history. And that's where we are right now.
Nice. Cool.
Yeah.
Thank
Yeah.
you. Well, we
And-
appreciate you coming on.
Yeah, absolutely. Sure. Pleasure to be here, and thanks for having me.
Absolutely. So, to everyone that's in chat, if you don't already know Signals.io, it's primarily a charting platform. Would you agree?
Yeah, I mean, it's a different kind of charting platform. When I was coming up during the recession, Great Recession, whatever you want to call it, basically, I was taught by a guy who was very, very smart, had a lot of money, taught me a lot of stuff about order flow, profile, symmetry, and ultimately, not to really rest on short time frames. We started in the S&P 500 futures, oil, commodities, things like that. And ultimately, it worked really, really well. It's a charting system, Signals 100%. But, it's not your typical composite charting system that you'd see on TradingView. We don't try to compete with TradingView in any way, shape, or form. The stuff you see on there, composite-based order flow and profile stuff, you're not getting the full picture of what's really happening. You're getting individual profiles for a composite period that don't give you the full picture of what's really happening over the grand, because Bitcoin's a 24/7 by 365 market. It's not like FX, it's not like stocks, it's not like commodities. That the reason why we built Signals is because essentially to keep track of all this information and create a profile that's continuous and updates with all of the trades coming through in real time across all the different exchanges, and can keep track of naked points of control, or these purple lines right here that you see. UFAs or unfinished auctions, things like you see up here, as well as sell and buy imbalances, right? So that's why we created it. We saw early on there was nothing similar to what I was used to as a trader. And my co-founder and CTO is in the chat here, Beeford. Give him the biggest props because he's a beast. He created all the algorithms. Took us 3 years just basically going back and forth, explaining things. And getting on the same page, trading and building everything out by hand, and essentially grew pretty large from there. And now we aim to help people understand how to trade auction theory, because every market is an auction. Doesn't matter if you're trading baseball cards, doesn't matter if you're whatever. If you are trading something in liquidity, it's an auction, and that's why we decided to go this route and really teach people the tools of my trade, which was 100% screen trading. We don't look at any composite charts when we trade, unless it's basically a daily or a weekly, because we don't care about anything under that. And it's been that way for me since about 2010. So yeah, this is definitely not your grandfather's charting system, if you will. And we aim today to kind of like dive more into the auction theory and profile side of it, so people can understand a little bit better how to use it.
And for those that aren't familiar with, when you say composite charts, like
right,
that's like your general. Go ahead.
Yeah, right. So exactly, just to finish that thought, hate to cut you off. As Brad could tell you, my mind works like a million miles a minute, so I'm sorry in advance. But basically, yes, composite charts are time-based charts. They don't look so. For example, when you go to TradingView and you see, if you put on any type of order flow stuff, they're not using raw ticks like we do. We pull every single tick from every single exchange, store them and cleanse them in a special way through our algorithms, and display them this way to you. TradingView doesn't do that because the sheer amount of data they're processing, that they wouldn't be able, they're basically recreating the candle from OHLC, possibly V data, right? We don't do that. So that's composite. Composite is something you put on a 4-hour chart. You get a candlestick. You don't get anything other than a candlestick. It's backwards looking data. It doesn't mean anything in the grand scheme of things. When I was taught in 2008 and 9 how to trade, and I looked at a 5-minute chart of something, my mentor, if you will, I guess, broker, whatever, used to laugh at me, and he used to tell me that that I was trading backwards. And it took a lot of time to kind of understand what he was saying, which is why I'm happy to do this this stream with you guys, because it's something that I feel once everybody gets at least a little bit comfortable with, you're not going to look at TradingView the same. It's not going to give you, like, just because you have some moving averages on there, or an RSI, MACD, like, this is all backwards looking data. If you're not looking at it from a daily or greater perspective, or at least a 4-hour perspective, it's not really telling you anything. When you use signals, when you see this chart, like I use, either, this is our clusters, right? These are basically how you read what's inside of a candle, right? And now, right here, these purple lines are called naked points of control, and this is called the unfinished auction. And this is part of auction theory, which we'll get into. But this is basically telling you, when you look at these lines, right, a lot of the times, if you look on, I mean, I don't know how you guys trade, but I'm assuming if you're doing composite charting, you're probably looking at like Fibonacci's, like maybe a pitchfork or something like that, or, something. These lines will, if you, compare across time frames, these lines will almost always line up with some very important support or resistance composite-wise, like a 61.8 fib, or if you're looking at like an extension, like a 168 extension, or a 23.6% retrace. This gives you the information in real time, right? So you'll see these things develop in real time. And usually when you see something like a naked point of control happen here, it's usually a sign of reversal. We always talk about this. Like, basically, right here was 40. We just did a video on YouTube about this also that you can go check out as well. So I'll just do a brief overview of kind of what we did there, where this UFA has been longstanding support for a really long time. And if you go back and look at a fib grid of the 2017 bull market to the lows and highs of that, I believe it's the 168 extension is about $45,000, which lines up perfectly with this. I mean, 61.8 is usually the most harmonic level for swings, and if you're doing like composite ABCD, things like that, Gartley's, they usually always measure out versus the 61.8, how they're confirmed or rejected. So the fact that this UFA lines up with the 61.8, 1.618 extension from that move in 2017 to the lows is significant, and it makes sense that we held here after that first flash crash from about 60 down to 40, and we created a UFA down there as well, which we'll get into on longer time frame. But so essentially, now that probably a lot of people weren't looking at that specific extension, right? The 161.8 from 2017. Not a lot of people are looking that far back. So now that this level has been held, tested, and then started to reverse. And usually when you see NPOX, it means reversal. And you'll start to see, a trend. See, okay, now you got through the previous UFA here, and then you went sideways because the market wasn't ready to rotate, right? You had another NPOC, tried reversing, created a bunch of buy imbalance down here, okay? And what happened was it rotated back through the UFA and NPOC to 50K, because 49, I mean, in our premium, we go over this a lot, so it's hard to take in a lot of what I'm saying in context. So real succinctly, I guess, 49K was a weekly sell imbalance for a very long time. And what happened was it tried to rotate through, couldn't, couldn't, and it was never able to daily close it. So we kept rotating back through it because the market wasn't ready to move. And we had the sell imbalance there. We had some UFAs there that were capping us because market wasn't ready to rotate. And as you can see, we just broke through it in style. And we're about to close, you would think, 49K on the daily, the UTC daily. So this is what we look for. Unless you're looking for very specific things in the composite world, like time-based, backwards-looking stuff, it's very hard to pinpoint staunch levels. A lot of times, newer traders will be on small, like low time frame, and they'll be, looking at things that are very noisy, and they don't know how to separate the noise from what's real. You know what I'm saying? So this is a system that it works a little different from the composite angle, and kind of in real time will give you levels that you otherwise have to be a pretty decent technician to find. So that's the real difference between composite and signals, in my opinion.
Cool. Yeah,
And,
that's I can follow most of that. I think people that are newer are probably
it's hard. I know. It's
wrapping
really
around it. Takes
right.
time.
It does. So this is a little bit more in depth. You have to know how to read like the cross order flow. Like, so it might look counterintuitive for guys who know a little bit more about what do you call it? I guess like cluster trading and bid ask stacks. Essentially, usually you'd expect to see like bids, or excuse me, buyers hitting the ask here and the reverse. But here, to make it more intuitive for newer traders, because we knew that going in, that a lot of times people don't know how to read these things. So we make this, the buyers hitting the ask. So you see all the buy and balance on this side, not this side. So we, like I said, we use this for kind of just levels that coincide with, longer run composite stuff, or, we'll see something like a big reversal about to like, see, it's almost like Divergent. You see here that, price is coming down, but you're getting a lot of people trying to lift it. And it's, it's hard at first, but you see it gets greener. And this is what we call window mode. So it's almost like a heat map. You see the activity kind of, how intense it gets at any time price opportunity based on how green or red it is. So you see there was a big amount of, buying happening here, and we were able to lift it off of these support levels of 47K, which if in our, not to show the premium, but like if we've been going over, there's a buy and balance on the weekly as well at 47. So you had support at 47, you had resistance at 49, you had all these UFAs and NPOCs all over the place, like a minefield, basically keeping you boxed in. And a lot of times that's market makers, that's low liquidity shenanigans. I mean, a lot of different things. And we kind of use the delta bars a little bit more to get a feel for where reversals are going to happen, to get a feel for, what's the overall skew at any one-time price opportunity. So that's what I kind of use a little bit more. I use the delta because I trade, like maybe like delta reversals, things like that. Things that if I'm looking for something, I don't really scalp. I'll go into like a swing trade looking for something specific, like a level to be tested and hold, or a level to be tested and blow through. And I know I'm going to get into a mini short type of swing or something. So delta helps you kind of feel where the buying and selling is most heavy. And then it shows you kind of absorption, which is an order flow term that essentially when you see price like basically coming down, right? But there's a ton of buying happening, like kind of like where is it? Like right here, you had no delta here, even with a lot of selling on paper, right? But no delta showed up, and then you got the delta reversal here, and we started to blow through 50K. So, I mean, there's a lot of different ways you can use this. We use this to look for reversals. We use this to kind of, look for, tops and bottoms a little bit. And you'll always see, in major liquidity moves, like let's go to a little bit longer of a time frame so I can show you all the stuff that we're talking about. So essentially, and this is how you navigate signals. So you would click on this up here in this corner right here. It'd bring up your settings, all of your exchange information, different pairs, exchanges, whatever, all here. You can do whatever you want. There's a lot of different, pairs that we offer. And then your price intervals for Bitcoin, I like if we're on long, like higher time frame, like real deep time frame, like a weekly, like I'm going to do $1,000 price ticks only because it'll be impossible to read any other way. And balance factor, I like to keep it at 10 just because it's worked really well in the past. Imbalance method, cross or sibling. I use cross because, again, I use more delta to trade. I just look for staunch imbalance levels where something's wrong, like somebody's offsides, and like usually that coincides with the UFA. So, and that's a sign of either you're breaking through it or you're reversing. So, that's kind of what I look for. UFA threshold. The lower the threshold, the more scrutiny goes into creating, like the less you need very specific volume signatures to create UFAs. So 0.5 has worked pretty well for us in the past. Price precision is 2 decimal places, which we have here. I mean, unless you're trading shitcoins, you really don't want to go more than that. But you could, you can go to whatever you want. And then essentially the period width, the amount of bars, the value area, refresh rate, and this is the window mode, like we said. I keep it in window for the heat map, and then ultimately the dome, which is right here, your order book and cancel replaces. So yeah, let's do that. And okay, so here's the 49K sell imbalance I was talking about right here, and the 47K buy imbalance. So you've been capped in this area up until right here.
Yeah.
Essentially, weekly wise, right? So if you look here, you have, if you split it through the middle here, sorry, my line is horrible, but you can split this into essentially 2 profiles, right? So you have up here, you're starting to work through a lot of orders. We've been seeing this in, again, the 51, 52K range in our private Discord is what we've been saying is going to be staunch, and it's going to be difficult to get through because you had a lot of lower time frame, not imbalance, but NPOC and UFA in that area. And then on top of that, you have a lot of resting orders that have been there for a while. And then after that, we've been saying, like, I have some swing longs from the 40s that I won't even consider getting out of until, not spot, just leverage stuff that I wouldn't even consider getting out of until right here. And we've been saying for the longest time that essentially the UFA that we saw on the 4-hour, which is around here, has been capping us. So we know we have a lower value area down here that's been well defended. This area right here, unless we're cracking this UFA, we're probably not unless the bull run is over. Should this UFA at 41, which is the lows of this move right here, should be okay. And we said that on the YouTube channel as well. I've been saying it for a while. You can even see kind of like just consolidating in this range, waiting for a breakout to like right here. And then you have an established value area here and here. You have liquidity down here. And now you're fighting through the essentially the high volume areas of the middle of the profile. And that's kind of how we trade. We look for symmetry, and we don't really use lower time frame stuff. To me, it's noise only because you don't have, it's like knowing how Bitcoin trades, right? Just kind of choppy, that makes crazy moves one way or the other. When you're on small time frame, if you're not trying to trade within that specific 15-minute period, 5-minute period, 1-minute period, it doesn't even make sense to be looking at it, in my opinion. But if you're an algorithmic trader, which we do as well, maybe it makes sense to hit the small time frames. We look at 15 minutes on algo, we look at 5-minute on algo, maybe even up to an hour. But again, if you're not trading that specific period, like if you're going to take a scalp and hold it for anything more than like 15, 20 minutes and stay on a 5-minute chart, I don't know why you'd be looking at a 5-minute chart. But that's why we kind of do all of our technicals based on this. So essentially, more or less, now you have a very uneven profile, right? You have this whole area right here that, is kind of bulky, essentially. There's no symmetry to it at all. You either want to see something like a P shape, a lowercase b, or a D, right? And this would mean full symmetry. You want to see a profile that essentially, when you draw a line down it like this, you can go like this, and both tails all the way across with volume peaking somewhere right here, which is not the case. It's not the case at all. So it leaves the door open a little bit. Like, this is bullish because when you see a P, usually you're going to extend the range up, and symmetry will take hold, and value will take hold, or not value, but price discovery will take hold at a higher level, and then come back to value and create this area right here, kind of like where the most like points of control are, the most traded points of a chart are, right? So we're kind of in that process now, in my opinion, where this thing is essentially, I think, trying to tap here where it'll fill in this part of the profile and maybe consolidate a tiny bit before trying to bust out and hit the and then if you go back to the chart I was telling you composite wise, the 2017 bull run extensions, the 4.23% extension, which is the last physical level on the chart is 71K. So, and you notice that they defend. You'll see more as the ladder rotates up that they're going to start defending 62, 63, 64 very hard, because those levels were the last levels that capped us before we made that run to 69, then a little bit above, and ultimately fell back down. So what I personally, the way I would trade something like this is I'm looking at symmetry. I see that we have like a very, thin part of the profile here. What'll happen is because you have NPOC here, usually you want to be, if you're long or short, right? If you're bearish, you might, and this isn't financial advice. This is just somebody looking at his screen, right? That's just telling you what they see. You know what I mean? So, usually what you'd see is low volume entries. So if you wanted to get short, theoretically, if we're not cracking this level right here, let's say we do crack it even a little bit and we start to run into problems, like I said, around 60 before we get to this value area where it becomes a different ball game. Maybe you see some sellers take profit here, which is already indicated by all the stuff that we keep seeing canceled, replaced, rotated, like right there, right here. So, you might see some activity up here if you wanted to take. I plan on taking profits from my swing long of, somewhere down here, around this level, because that's what I'm expecting, a fight. We might crack it the first time, but we also might run into what we ran into down here, and it's going to become a battle. So in my opinion, the profile can tell you more than any composite chart. Ask anybody in our private alpha, a newsletter subscriber, we don't even, unless we're talking about daily or weekly composite charts, we don't even look at them. So it's like, this is how I trade, and this is something that just shows you the, I guess, how an auction plays out in real time. It shows you where people are heavy buyers and heavy sellers, and it shows you where value is in an auction. And on a weekly, obviously, somewhere around 32K is value, which, again, if we're going to crack this UFA and this held, probably rotate back up. But if this cracked, it leads me to believe this is cracking because, we've tested it before in the past, and it's been very staunch, as you can see. Very, very good support for the whole. These are weekly bars too, clusters. So yeah, it's been that way for a while. Unless we're cracking here and heading somewhere down here, my opinion, probably going to rotate towards here and see some people take profit. Ultimately, maybe try to sell, rotate back into value, into the point of control, or maybe even try to attack lower levels. But I'm still bullish. I think we're going higher. I had higher hopes for this bull run, in terms of price, but especially with the Federal Reserve coming in soon, in my opinion, might start talking rate raises. Historically, 100% of the time, rates even are hinted at going up. You're looking at a 50% correction. So I'm not saying that's a definite, but I'm saying, if we're going to get a run up, it's going to happen now, because I don't think we'll get hints at rate hikes in January, but we'll probably get hints at rate hikes somewhere around March or, shortly after that, which if we are at a 90, 100, a 50% correction is back to current levels. So that's, just from seeing, like, thousands of hours of screen time, that's my opinion of what I think is happening. But you have to be open to both sides of it as well, which is why we rest more on this type of stuff as opposed to your basic Fibonacci or whatever moving average stuff. So
for sure. And just a quick question. I know that when I first started using signals, I noticed that when you you can cycle through the visual of the.
Oh yeah, absolutely.
I was wondering if you wanted to just briefly go over the different ways you can visualize.
Absolutely. Sure. So like I said, this is a cluster. It's going to show you buy and sells stacked next to each other. And it's if you're really good at reading order flow. Like if you know how to trade order flow, like I'll come on maybe a separate time or do a video with you guys even and just kind of show you, because that would be like its own video of how to like kind of read order flow like across and mark levels and you kind of really have to know what you're doing with that. And it's a little bit longer of a I guess time that we have right now. But that's what this is for. If you don't know how to read order flow, really, you're going to want to use this just to see the buy and sell imbalances, to be honest with you, because no other platform has this in the way we do it. And this is all proprietary. So anybody that says they have it the way we have it, where it's continuous over a 24/7 by 365 period, I would love to talk to them because, it's something that I've never seen work on anything else. I know there are other people that do it, but that's a different story. Then you have, like I said, the delta bars, right? So delta bars are going to tell you at any given TPO, essentially the change, like the amount of liquidity being exchanged at those levels. And the darker it is, like I said, the more liquidity, the more buying and selling. You usually see these very, very light levels in liquidity events where things are gapped through, and usually that's why you'll see so many UFAs MPOCs in that area. UFAs are harder to come by. Because there's very specific volume signatures we look for. NPOCs are a different story, which essentially, they're points of control, which is a profile thinks, point of control is just the most widely accepted price on a profile. So here it'd be somewhere like right here. And then you have, and you notice it's a P shape, right? Like, which tells you price was going to go up, which it did. So, this stuff works pretty well. You look for these areas where you get like low liquidity, nothing happening, low liquidity, nothing happening, then it boom. See what I was talking about absorption wise? There it is. And then bing, up there, comes back down, tests all our support levels. And now here we are waiting for our next ramp up into resistance, which is ironically an NPOC. And then you have overall volume at every TPO. And that's going to just tell you overall volume. And then you can cycle through the profile, we're set up pretty nicely zoomed in right now. I mean, if you look at it, it kind of just confirms everything I'm thinking. I mean, this is zoomed in super precise, but, it looks like it's set up to, in my opinion, this is just, again, not financial advice, but just reading the profile, like you don't even need to look at a chart. Like, once you get good with this stuff, you're not going to have to look at a screen like a trading view ever again. You're not going to want to either, because it's not going to give you the same, I guess, like guts that you're going to learn. Like guys that are new are going to learn like your gut is everything, your laurels resting on screen time, and you've seen this a billion times before. Everything is that we display here is going to make your life infinitely easier than if you tried to guess on a composite chart. So that's that. And then you could do the same down here. It's the same exact thing. Overall volume split, and delta bars. And I like to keep it on delta, like I said, because and I accept the profile just because I like to see the buy sell splits. Because when you go to delta, this is delta. Like you can see, like there's been a lot of selling. We're up in these levels, like a lot of selling, right?
Yeah.
Which makes sense. Because we've obviously been trading sub 50 for I don't know how long, weeks. So at least 2-3 weeks. So now it's a different picture. I'll cycle through it sometimes, but I really like to keep it on the split just to see how people are leaning at any one price. So that's the way I do it. I cycle through all those, but I mostly keep this up with this and delta bars. And then over here in your lower right, you have OFI, which is just an order flow indicator. It essentially is, what do you call it? It basically tells you, like, I don't want to give away kind of what Brad did here, but like essentially it looks at the Z-score of order flow over a specific period, and it gives you a very good indication of when you're getting, these are sigma, right? So that's just basically deviation, like standard deviations. So right now it's nothing, less than 1/10 of a standard deviation move in order flow. So nothing's really changing here, but you'll see this thing pop. We're on weekly also. For this thing to really be up or down, like a 1 or 2, 3 standard deviations, is a massive move would have to be happening. So obviously it's kind of just, it's quiet right now for the most part, so it's not really crazy. We'll turn this on a lower time frame in a minute. You'll see a little bit more action, but you get a good idea also of how the books are leaning off of this too. And you use everything in conjunction with one another. Eventually, that's how trading, harmonic trading, everything kind of like feeds into everything else you're using. Once you can like learn how to use this piecemeal and it all confirms the same thesis you have, it becomes very easy. And I don't want to say trading is easy because it's not, but it's just a matter of getting comfortable and trusting what your eyes see you, and kind of knowing a little bit about market psychology too, because it's all psychology at the end of the day. You kind of have to know it's a zero-sum game, and kind of, like I said, rest on your laurels, and you got to kind of not have bias as best as possible, and not be emotional, and when the time comes to stop yourself or get out because something doesn't look right, you got to know how to do it. And this in my opinion, makes it much easier, especially with the Delta, because it's a clean picture and it's less guesswork than kind of resting on a trading view chart with some random indicators on it, in my opinion.
Yeah. I can definitely, from the limited amount of time that I've used signals, it's only been a handful of months. It definitely very different than looking at your standard, RSI and MACD or whatever people are using these days on TradingView. So
absolutely.
I think for the people that are newer to trading and don't really have too much experience with signals, I was wondering if you kind of just had like just some like very general, like brief advice for, okay, all right, if you're day trading every day and, you have sort of like a daily setup of, okay, in the morning, I look at, the hourly through the weekly or the monthly. Yeah. So,
100%. So that's actually really, that's good, because that's exactly what I do. I go across time frames. So I'll go, but I'll never go under 1 hour, only because, again, I mean, do whatever you want, experiment with it, but you're going to see that anything under an hour is noise. I mean, even in Bitcoin, unless you're trading FX, like even 5 minutes in FX, unless you're trading an FOMC release, something volatility wise, it's noise. Like I don't know anybody that stares at a 5 minute chart and is swing trading. It's just, it wouldn't make sense. You're not. So for me, I start at the hourly, and I usually do $200 ticks, and then I leave everything else pretty much the same. Those are my settings. You just saw them, and I keep it on Delta, right? And sometimes you'll have to scroll back to get all of the UFA levels previous and POX previous. But right now on hourly, we've busted the out of our range. I mean, this is clear as day. I don't even have to explain to you where support is. And ultimately, this was resistance on low time frame. You don't have any real symmetry yet. It's gonna probably turn into a B shape on the hourly, and we're gonna reverse closer to the trend line of about 49K. Again, this isn't financial advice. I'm just looking at something that and going through probabilities of what I noted. You know what I mean? So essentially, like, what's going to happen is you're going to find somewhere in, like, oh wow, I didn't mean to do that. You're going to find somewhere in the I would imagine, like, right here, in this range of about $1,000, $2,000, you're going to find some resistance, and you're going to come back here, fill it, and probably try to trade out here. It'll turn into, because it's going to run up. So you're going to have this right here, and then you're going to trade out a little bit here, then here, and it's going to create that B, as you can see right there. So that's just a theory, right? And we go by hypo. So this is how I start my hypotheses, right? So I'll start on the hourly. I'll do something like that. And then I'll, just symmetry. I'm not looking at anything else at this point, just symmetry. And I want to say at least 60 to 70% of the time this plays out on low time frame, just because it's there's dynamic forces here beyond just me and you trading, right? I mean, there are arbitrage bots, there are other bots that are capping. When we were, even like a guy that, like me, who's not even, I'm a regular dude, we were creating bots in 2015 to narrow spreads when they got too wide. So there's a lot of things at play here, and I think that higher level guys are probably waiting at the 52K range, and they're gonna dump some inventory and bring us back somewhere to support, which would be down here, retest the base of the move somewhere right here, and then you'd start getting that B shape, consolidate. Ultimately it should hold 48 and change, 49, and then you blast off. That's my opinion, to 57, and then we see how it reacts up there. So that's how I'd start, and then I'd go to the 2 hour, and I'll take a look. Same settings at this point, and already it's a B shape. It's like, you got to think one step ahead already at this point. So now you can
already new sell 10.19,
and you can already see now we're starting to get some sellers already front running this thing, right? They know this isn't by mistake that this is happening, right? Like, this is on purpose, because real traders don't trade like a market maker that's got a technician that's sitting on 500 Bitcoin of inventory that's got to move it and has to make money, like a guy like a guy sitting at an FTX desk or something like that. Like, they're not looking at a composite chart. I mean, they're not, and that's really what it comes down to, is you have to know where your levels are. And right here is just an indication that we're going to have trouble rotating through 51, 52. It hasn't even started yet. You're already getting the B shape, big value area over here. People are going to start selling into it again right there. You already see 52 and a half, 51. The writing's on the wall. All right. So there you go with that. Then you go to the 4-hour. Well, I'll go to the 4-hour, keep it on a 200 tick. Again, same thing. But now you have a double dish. Well, it's not really a double distro. I mean, it's it's a weird, not weird profile. Something that you know, it's hard to really read. Yeah, maybe zoom out a little bit, and yeah, it's like a B shape already. Double distro B shape. Maybe you fill a little bit in here. Value sellers back down into here, about like we said, 48. All right, and then you go. I'll skip over the 8-hour to the and 12-hour to the 1 day. I'll put it on 500 pick intervals, and yeah, 57 is my take profit. 46 MPOC, but you know what? These low volume areas down here, around 48, I think keep us capped again. B-shaped profile. Probably try to fill in up here once we pull back. Because we have no value area, it's probably not going to create. This will probably start turning into a value area as we pull back, and then you get the lift off as bids chase. Like you can already see them stacked. They'll start to chase, and that's how you get that type of liquidity event to push you higher. Then I would like to go to a 3-day. No, 3-day, and that's when I'll go up to about 700. And then you get the whole picture pretty clear. You've had a lot of selling, even before the recent all-time highs. Look at all that delta, but the thing about that is now this is where you have to kind of put it all together. It makes sense that, you get positive delta on lows because it's value. People are real traders that are swinging 1,000 Bitcoin, 500 Bitcoin, 1,000 ETH, things like that. They're looking for value. They're not going to overpay you. That's why trends take so long to play out. They're not going to overpay or cut themselves short in any way. They dictate the market because liquidity starts and stops all moves, and they have the liquidity, right? So at the end of the day, that's why you see divergence into lows, right? We just got done talking about this. So we look for a divergence, and here we go. We know where our support and resistance is based on things like this. And, then you get all this, which makes sense because you get the run up, you get, guys chasing, and essentially they're dumping all of this onto you.
Retail.
Right, exactly. This is how it works. I mean, even when I was in the pits, this is how it worked in the S&P. I mean, it's bad. It's again, auction theory. Full wagon theory is a part of auction theory. It's guys that are starting the moves are the only ones on the train. Then as more liquidity hops on, it gets heavier, and you're going up a steep hill, right? That's the, that's what a stock is. That's what anything is. Well, a stock is essentially forward earnings on a curve, right? So you're going up this curve, right? And essentially, as more people hop on the curve or hop on the train as you're going up the curve, it gets heavier and heavier, and then you get big guys start to hop out, right? And then you get more big guys start to hop out. And then more people hop on. You get more big guys start to hop out, and then boom, and that's full wagon theory in play right there. So you're not going to see this on TradingView. So that's how I kind of, my day starts like that. I'll go to bed. I'm in the Eastern time zone, so I'm sure you can tell by my voice, from New York. So essentially, so now. I'll go to bed some around 1, 2 in the morning after UTC open close, a few hours of Asia right before Europe, and then I'll wake up at like day trader margins around 8:30 New York time, and then that I just compare that every single day. That's what you said is literally that's exactly what I do. So across the hour starting, it stays at 200 tick intervals until about I would say the daily, or you can even start at 12-hour. And then you want to get to about 700 on the, the 3-day, and I like 1,000 on the weekly because it makes it a lot cleaner. And that's how I do it, and that's what I look for. You want to look for this type of stuff. You never want to be buying into like this, because this makes sense, that you're getting redistribution at these prices. It's essentially auction theory, full wagon theory. That's how it works. There's nothing unusual about seeing, because we got a lot of questions about that. And the first premium we ever wrote was called the Absorption Rally, because from March 2020 to about, I would guess, like June 2020, you had obviously everything got nuked, and we got crazy absorption into those lows, like crazy absorption. Like you saw essentially like a almost halving of price or more, and you would see these green bars all the way until we started getting this curve, like we were talking about, right? And once you start getting this curve, it's almost always when I would love to measure the degree of it if I was like really good with with that type of math and see where the curve itself happens, where the divergence comes, where you get this flip in delta, because it's all the time. Bitcoin is one of the most, it follows order flow and auction theory and profile better than ES, the Qs, anything. I've never seen it. And that's why we did it, because we had a theory that it started around like 2017. You got a lot of correlation between like traditional markets and this, and you saw at the end of like Brexit in 2016, it decoupled. You got that first move into the bull run over 1,000, and then it started getting a little bit more correlated to the S&P after that. So, with that hunch, we kind of started to build this out, knowing that was the case because all of our bots use this anyway. And then we started realizing it's like we have to make this a retail product because it follows it better than the S&P and stocks. It works. This type of trading system works pretty much for anything, minus maybe like very, very deep Forex markets. But it follows this order flow, profile, auction theory, and the price action like so much better than even the best days I've ever had in the oil pits or S&Ps or Qs or anything. So, what I would say is like, don't get discouraged. I know it's weird to look at, and it might be counterintuitive because you're just looking at a bar chart of some nonsense that doesn't tell you anything except that price went up or down after the fact. This at least is going to tell you as it's happening. It's going to give you confirmation as it's happening. And we answer me and Brad try to answer every single question we possibly can in the help, this part of our Discord, So if you ever have questions, feel free to hop in. I try to make videos and do stuff like this whenever I can. This is my first stream. Thanks for having me. But we try to educate. We do whatever we can. We're helpful. We want to see this type of system grow, and we think that as people start to get comfortable with it, it's going to become second nature, like it is for more veteran guys, and you're going to make a lot more money as a result. And you're going to save yourself a lot more money too, because if you're again on small time frames and just like looking at some 5-minute chart or whatever you're using. I don't know what you got. You probably all using a bunch of different stuff, but it gets to a point where it's very, it's very difficult to manage like getting chopped up like that. I've been there. We've all been there. Getting chopped up in small time frames, scalping. Whatever you're doing. So this will help you avoid that. You won't have months of work disappear in a day or two by accident. Everybody's been there as well, blowing up accounts. No one wants to blow up an account. Just, I'm not saying don't use Composite at all, but it shouldn't be like that basis for trade formula. It shouldn't. I mean, it just because like it's not telling you anything. And at the end of the day, like I said, we do our best to educate and answer all questions. So feel free to hop in. And if you guys have any questions, be happy to take them.
Yeah. Awesome. Yeah. It's fantastic. I really like the platform and the console on Signals, and
thank you, man. I really appreciate that. We've tried to do this for a long time, me and Brad. Again, all this goes to Brad for coding it out the way he did. Guy is a beast, and it's been a long process. We've been incorporated for 5 years and just came out of stealth like basically last year, end of 2019, beginning 2020, and it's grown quite a bit, but it's not there yet. We know like user wise. So like I said, we try our best to educate and help however we can, and it makes me really happy to hear that people appreciate the work and that they enjoy using it. It makes it like a lot. It makes me feel good, because a lot of people don't understand this stuff to begin with, and the fact that people want to still learn and want to find an edge, I mean, it's great. It makes me fired up. So
cool. I personally have a few questions, and I know there's probably some other questions.
Me as well. And
all right, cool.
Don't take too much of your time here, but
no, I mean, yeah, dude. Honestly, like I got a little bit more time, so we can take some questions for sure. If you guys want to start with yours, and we move on from there.
Yeah, just some like general questions because I'm,
Sure.
People that are probably newer in chat, they may feel a little bit too shy to ask, but
Absolutely, man.
When you're looking through the settings on signals, are you always going to be looking at like spot markets on Binance, just like the highest volume, highest liquid? Do you ever look at any of the other pairs?
Dude, honestly, I hate to say this, like, because it's not like I've been in Bitcoin for a very long time. I'm a maximalist. I'm not toxic about it, but like I really don't trade many other things, like personally. So for me, I'm always on the futures because I'm leveraged. I'm long spot always. I'm never hedging. I don't believe in that. And for me, I try to only use spot markets when I'm looking for, I guess, like either like a correlation on a certain time frame between spot and futures. Like usually I'll always use Bitfinex because if you've been around for a while, Bitfinex is the leader. Binance has a lot of volume, obviously, which is why I use it. But for spot, in my opinion, Bitfinex is it. It's always led markets and runs and dumps. So that if we were gonna, and it's much different than this. So let's quickly go to that and So. Yep. Let's see a second. So yeah, Bitfinex right here. So we can look at spot by looking at the USD. So USDT obviously are tether pairs, stuff like that. If you want to look at spot, you have to look at USD. So we're going to do that. We're going to stay on the 3-day. Okay, so we're good. And then it's going to look a lot different. Yeah, so not like crazy different, but you see how much more like fluid it is. Look how beautiful that is. Like that's a P-shaped that's a P-shaped profile. And at the end of the day,
you can swear, don't worry.
Okay, yeah, I don't know what dude, this is what you want to see, dude. Like, I mean, because this is a perfect P. You have a nice value area launching you. Look at how hard and you don't see as many ticks, right? Because this is on a 3-day. Bitfinex is very smooth. There's whales on there, big dudes trading on there. I know a few of them. And at the end of the day, it's very orderly. It's you'll get wiped out, but you won't get wiped out as easy as you will on Binance. This is very, in my opinion, this is bullish. I mean, if you're not bullish looking at this profile, you weren't listening. So you have a small value area up here. You're gonna run into problems once you get past, again, 61, 62, 63. That low to mid 60s is going to be a bitch. But once you crack 67 and ultimately take out the highs, which UFA at the highs, of course, right? Because we reversed heavily off the highs and we had tiny imbalance up there. So now we're going to crack this and we're going to hit this level, in my opinion, somewhere up here. That should start a chain reaction of chasing, right? So yeah, you're right. You definitely want to cycle through and to formulate those type of hypos, to kind of get an idea of where the spot, and that's a very astute thing to bring up. Because you don't want to only look at one or the other. I mean, if Signals is free still. Like we're not charging for this. You can keep as many sessions open with as many different time frames, different exchange pairs, whatever, as you want, and kind of compare the two. One thing I would say is just being very careful with like conflating what's happening over the long term and for a spot and futures, right? Because you get it's hard to kind of what's the word I'm looking for here? So like in futures, there's a lot of fuckery. It's just bottom line. And you kind of have to, and that's why this is so much more fluid and pretty and nice and setup wise, like, than we saw on Binance futures on the same time frame. And this gives you the better picture of what's about to happen. You don't get that ugly double distribution with some nasty split volume all over the place and value areas that are all ugly. This has a very, very, very well-defined value area on the 3-day. Very well-defined. I mean, dude, there's a big value area here. Like there's all the way up to 54, which is why it's going to be hard to crack through it completely, right? Like the line's right here. And we keep saying, once you get through 51, you're going to start having problems before you get to 57 because you have that gap in the futures liquidity where it's fragmented and all markets seek balance. That's it, and here we don't have balance yet, but we're on a trajectory to blow through, in my opinion, the 57K MPOC. and then the 57K UFA, and then ultimately MPOX that were resting slightly above that in the 60s. And after that, the mid 60 MPOX and all that imbalance up there and inventory lingering around that could rotate all over. You have to tap that 70. It's really like 70.4 on the, 4.23% extension from the 2017 market run. So that's the last level I'm looking at. After that, guys, honestly, it's price discovery. That anything can happen. You get chasers, you get institutions, sovereigns. I mean, you have, how many sovereigns at this point are buying for their own wealth fund, besides El Salvador. So, I mean, but again, it's still early days. Nobody believes that we're going to really run to 200, 300K this time, right? So what happens when you break? I mean, we're under resistance, so what happens when you break it and resistance is all-time high? You have to chase at that point. So, if you haven't been in Bitcoin long, Bitcoin, when it goes in price discovery, it's over. You have to chase it. There's no pullbacks. It's that. It's either you catch a falling knife and you're about to look at the reversal here. You kind of have to, again, you need something. I don't want to say ironclad because nothing's ironclad, but you need something as close to ironclad as you can that doesn't lag, right? And composite lags. So that's why we're saying, don't not use it, but I wouldn't lean as heavily on it as most people do.
Yeah. And so for somebody that's sort of like newer to DOM trading, volumetric trading, auction theory, and maybe they're feeling a little bit overwhelmed by the amount of information to take in,
sure.
Like, how long would you say is like a good amount of time to like really get comfortable with this style of trading? Like, do they need a year or like just very much a ballpark figure?
I would say a year is good, man, because my first year of trading, I was trading for a book. We were a prop firm, so we traded for a book of clientele, and my book wasn't big. It only had maybe a $500,000 in it. But this is what we did, and the thing that is going to help accelerate this process is not looking at composite charts. Fact. That's it. And that's what I was taught. I mean, I'm just resting on what I was taught at the end of the day, which is don't even look at this chart. You're wasting your energy. You are. I mean, maybe it feels comfortable because you have hindsight bias kind of guiding you, right? And it's uncomfortable to have to go through the probabilities and to have multiple hypotheses and to rest on screen time. So yeah, there's no way to there's no shortcut to it. It's like the Tom Brady commercial from 2015. Every single day. You have to be doing it every single day. If you're not, this is your craft, right? If you want, this isn't a hobby. If you want to make real money here, you want to be a millionaire, a decamillionaire, you need to, this is your craft. So I don't want to say there's a time frame specifically, but I didn't start getting comfortable with the DOMs until, over a year. But I was young. I was very young. I was 21. Mm-hmm. I'm sure so many people are probably in that age group now, so don't get discouraged. But it took me 10 years to really. I don't think you ever really feel truly comfortable, honestly. At this point, it's been almost 15 years. I start to feel comfortable only because I've seen things a billion times before. That's when you start feeling comfortable. When you've seen something so many times through that every single day mentality that you don't even need to think about it. I was just talking to you about looking at a profile. You know what I mean? And literally, that's the broader way I trade. I'm not even looking at charts at this point, but it's resting on that screen time. So I would say 6 months of just every single day, 12 hours a day. That's what I do. I'm in front of the screen 12 hours a day, and my wife yells at me. You know what I mean? But if you want to get good, this is the only way you're going to get good. And it's hard to scalp DOMs without really having that experience. Even me, I don't like to just scalp because it's not something that, you have to have very, very short memory of bad trades, and you have to have very, very, very tight risk, very tight risk. I learned how to scalp from one of the best traders, algorithmic traders that I've ever met. And the guy was a fucking machine. He literally, if he would have time stops. If it didn't start working within a certain amount of seconds, he's stopping himself out. It was like that. So, and that's the only way you can really make money in size on scalping is if you have a very methodical system. And again, it comes down to knowing your market. And and resting on the screen time, because how else would you know how many seconds it would take to stop out of a 5-lot ES trade? You know what I mean? Like, you would know, okay, I'm scratching this because it's been 10 seconds and I'm not rotating off this level I thought I should rotate off of. And again, it all comes back to auction theory and knowing your levels. So, I'd say a year. I'd say a year of like every single day, you'll be a beast. And if you're really, really dedicated and you're consuming content, you're come into our Discord, sign up for the newsletter, for our premium alpha, stay with you guys, do whatever. I mean, but you have to be practicing it. Otherwise, it doesn't matter if you do it a year, 2 years, 3 years. If you're not consistent and you get discouraged, and you're like, I'm going to take a few months off, then you just start from square one. The whole flow of the market's gone out of your head. The whole, everything you built kind of just recedes a little bit into the subconscious. So every day, no matter what, even if you're paper trading, just every single day, 6 to 12 months, you're very comfortable in your own skin, and you can rest on what your eyes are telling you.
Cool. Yeah, I would tend to agree that, the longer the better, and maybe never feeling comfortable, or at least, eventually getting there, not trying to rush.
What's funny about that? Whenever I feel comfortable, bro, I know I'm destined to hit a bad trade. Whenever I get complacent, I use myself as a contrarian indicator. I'm too complacent right now. If I'm this complacent right now, something's wrong. So at the bottom of the 2017 market, I've been holding for a long time. You know what I mean? Like, nothing bothers me at this point. Price action, fuck it, I don't care. But at the bottom of that market, man, miners capitulating, everyone capitulating. We're under 4,000, under 3,000. I was getting fucking pissed. Like, I was pissed. Like, I mean, the most pissed that I've been in a long time about something like that. And I was like, wow, this is starting to piss me off. And I was like, wow, you know what? This has to be the bottom. This has to be. I've never been this mad. We held through the bear market in 2014 when they dumped from $1,100 to almost $100, and that didn't piss me off as bad as 2017. So, I mean, you kind of also get to feel like, you get an idea of, you use yourself as an indicator almost. You can use anything. It's just a matter of like knowing the conditions you're in. You want to make sure you're aware of everything that's going on, and especially yourself. And that ultimately, once you become aware of your own, your gut, and you start to trust it, I would give my gut a 70% of trade. That legitimately, like, you can ask anybody. So I mean, but
your
that
gut
comes
gets better over time, right?
Over time, and there's a lot of books on this stuff. I wish I should have thought ahead and kind of like got all the books, because I mean, a lot of stuff. I could send you something, and if you want to put it out there, a few links about gut trading and what it means to like harvest your gut essentially. That ultimately, once you get that strengthened and you can really trust what you're seeing, it becomes very easy. And like I said, when I get complacent, I know something's wrong. I trust what I see always, but I always have like this little. That's what makes me and most people that do stuff like this professionally a little different, because you're very hyper aware of psychology, and it's almost like you have to be very honest with yourself as a person. You can't be like full of shit and try to like bullshit yourself, because you're not going to get away with it. Market humbles everybody. Right. So, at the end of the day, always never get complacent. It's never going to be like, wow, I feel real good right now. You're going to feel good. Like, I'm looking at this chart, I feel rock solid, but I know it can end in a second. That's the difference between, you know what I mean? That's the difference between a trader that's a professional and somebody gambling.
Oh, yeah. Yep. And there's I think, in my opinion, there's a fine line between trading and gambling. And it's easy to stop trading and to start gambling.
Man, gambler's fallacy screws everybody up, man. Everybody thinks they're gonna like. I hope my buddy's not watching, but I have a buddy, I'm not gonna say who made 7 figures. Dude, one of my like childhood friends. I love you if you're listening. He basically made like 7 figures on shitcoins and refuses to take profit, and that 7 figures is now closer to like a few $100,000. So, I mean, dude, it comes down to like, gambler's hindsight fallacy, like that whole hindsight bias and gambler's fallacy. Oh, I'm down a little bit, I'll just keep buying into it. Listen, you need to know the line, otherwise you're gambling. Like, you can't just like, I don't use stops all the time. Like, I'll mental stop, time stop myself, but I know where the line is. You know what I mean? Like, I know when I'm wrong. You can't once you start gambling, just holding bags, like, dude, if you guys are first cyclers, like, and you're going to start holding shitcoin bags, like, convert it all to Bitcoin right now and just save yourself the headache, because you're destined for a 70-80% correction at some point. So, if you don't believe me, welcome to the club, because it's going to happen. And, and you'd rather be bag holding Bitcoin, my friends. So, 100 out of 100 times. So, and not only that, but
what do you think about for some people? I often propose this alternative is go on something like FTX and hold Bitcoin. And if you want to trade alts, just do super low leverage, buy the amount of the alt you want to trade on futures. And then you can see how low it's going or how little it actually affects your balance over time.
Right. So for a guy like me, like I have my whole portfolio is Bitcoin minus like 3%. And that 3% is enough to kind of like to do whatever I got to do. So for guys that don't have that ability, what I would say is exactly what you just said. Put some Bitcoin. Just don't over lever yourself, because that's not the way to do it. But I wouldn't just be holding shitcoin bags like physically. That's not. I mean, I don't even know how people feel comfortable going to sleep with some of the bags they're holding. To be honest with you, I'm serious. Like, I'm not trying to be a dick. You know what I mean? It's like it comes down to like, listen. I mean, Bitcoin itself, when there's a hint of a rate hike, and we've published this research already. It's not out for the public, but for our subscribers that pay us, we've already published this. There's a sniff, a hint of a rate hike. This thing is 50% in half instantaneously within a 3 to 4 week period. Okay, so if you think Bitcoin halving is not going to take your shitcoins down 80%, you're nuts, and that's like just something that you should try to avoid like the plague. You're gonna get some type of continued, but now you're even starting to see differentiation in what alts are starting to run. L2s, L1s like Matic, Solana, which again is Solana's trash, but like, I mean, Matic, L2, good L2, AVAX is a good L1, Luna's a great L1, been going crazy comparatively to the others recently. So, those have like a viable, user base, people that are amped to see it and want to hold the bags because they think it's going to compete with ETH or whatever, okay. But again, it's still going to have, if not worse, when Bitcoin goes down. So wouldn't you rather hold, like, again, if you're this Web3 guy and you really think that like you holding shitcoins that are like essentially like given out to VCs and investors before you, and you think like you're not going to get dumped on, like, I mean, all you have to do is look at Bitcoin. They're dumping it on us now. Like, you know what I mean? Like, they're dumping. Like, they're dumping one of the best assets ever on you. You don't think they're going to dump Solana on you or AVAX or any of this shit? So it would make sense to do exactly what you just said. If you're bullish, maybe start converting with these ratios between, Bitcoin and the casino coins being decent, convert them over, hold the bag, wait for the run. And then what I would do is again, it's not financial advice. This is what I would do because I don't give a fuck. So I would sell all of my, or X amount of, Bitcoin at where I feel appropriate, when I feel this runs over, X amount to Tether along with my shitcoins to Tether. And I would just go to Anchor or something like that. You know what I mean? Like, why would you, why would you even hold this shit? And then you're making stupid APY in Tether, and then you can like start sending it through all these bridges. Then it's time to start getting back into like an AVAX, a Luna, and start moving things all over the place and starting, that cycle of, collecting APY and reinvesting the profits at essentially zero risk. Because if it blows up, it's just free money anyway. And that's when you start experimenting. But now, a lot of people are praying for shitcoin pumps, and I don't know. I personally, I don't really trade anything outside of Bitcoin and ETH and some shitcoins like some L1s. Especially, I don't day trade anything but Bitcoin and ETH, or swing trade. So if I'm holding a bag of something, it's because I'm trying to earn APY somewhere else. So if you're not earning 80,000% APY or something stupid about like an OHM, like whatever 1,000% APY. You're gambling. You're literally like, I love people that just have like stupid bags of ETH that I talk to like my normie buddies all the time, and they've like, I got like 50 ETH. Like, what are you doing with it? Why do you have 50 ETH? Like, are you making more money with that? Like, or are you just holding it, hoping for a pump? Like, it's just, to me, it doesn't make sense. But, use signals for whatever you want. Trade whatever you want. I'm a tiny bit biased because I've just been around. You know what I mean? But yeah,
everyone kind of has to formulate their own trading and investing thesis. Everyone has to make their own mistakes, and you know, I think there's almost like, especially in crypto, there's like this almost like trial by fire where you have to fuck up enough. And like eventually everyone kind of gets to
multiple times before getting profitable.
Everybody fucks up. That's what it is. Dude, I'm 34. I've been trading since I'm like 21 right now, or maybe even 20 when I first got out of college. So now, I mean, just trading oil, dude. My biggest trades ever were besides Bitcoin, fuck Bitcoin. I mean, biggest like fiat trades ever were in oil, S&Ps, and Forex. Because that's really when I started. Like I was a managing director of a boutique firm. I got into Bitcoin. I was like making them so much money just like through kind of making like 10 pips covering spreads and a little bit of profit. I was like, this is stupid. Like, this isn't even like work. This is just like annoying. So I started trading FX. My biggest trades were always like things like oil and things like that. But at the end of the day, you know, unless you go through it, like I've lost so much money in that process too. It's like, you know, you think you know everything, and a lot of times like newer guys, you try to like how do you put this like softly? Like, 'cause I'm really, again, like I'm just very like to the point. I'm not trying to be, you know, or anything like that, but like newer guys tend to like, you know, you give them advice, and you know, in the beginning they listen, they start making money, then they start like, in a bull market, everybody's a genius, you know. So it's essentially, I started doing this and this and this, and you tell them, bro, that's good for you, but I have no interest in that. Oh, why? I'm this. And what happens? You go from 7 figures to fucking 200 grand. So, you know, I mean, at the end of the day, it comes down to, you know, it comes down to like you said, you have to kind of trial by fire with it. Like I said, I've made a lot of money trading, you know, oil and stuff like that, and I also got too big for my bridges, threw 10 lots of CL on and blew the fuck up. So it's like, you know, you unless you go through that, you don't know the feeling, like the humbleness of like being humbled. Like you think you know everything until you get a slice of humble pie, and then you feel like an idiot. And it's kind of like, wow, how do I rebound from something like that? And you have to really, again, it comes down to like trial by fire, like you said. It's all markets, especially Bitcoin. Like Bitcoin is a trial by fire thing. I didn't even like, there was no such thing as Bitcoin maximalism back then. We just knew that, like, based on being Forex traders and guys that, like, you know, saw the early days of Ben Bernanke fucking the whole world up, you know, that this was probably going to be a viable option. But a lot, even in the beginning times, knowing that, you know, seeing something go from 1,000, 1,100 to 170 is scary, man. Like, you know what I mean? It's like, it's scary. That's like a 90% correction. So, I mean, I don't know if the days of 90% corrections are going to be here forever, because it's just becoming more institutionalized. But like, you know, like you said, you got to go through it, and there's no other way to do it but go through it. So,
yeah, absolutely. And I think it's kind of goes back to your point, that Bitcoin is different in that, like, what have we seen in like a 10-year cycle that people will buy an asset, hold an asset, keep buying an asset.
Oh yeah.
When it goes down 90%. I think Bitcoin is a little bit unique in that way.
It's very unique. 100%. You're right. Mm-hmm.
So I want to give Frag and Ronnie and Behavior time to ask a couple questions in voice. So Frag, if you have some questions, go ahead, or Ronnie.
Okay. So I feel like my questions are slightly selfish to my style, but I can justify it because this is Trader Samwise's channel. He created Tealstreet. Me and Lat work for Tealstreet. And I've been trading live on his channel for like about 4 weeks now. So people are going to like understand my style, and that's how I can kind of justify these things. Fine. So one thing you said was about the 5-minute chart. So here's my style is basically, and I started trading in March, and I became like 6 figures profitable 6 months in. So the last 2 months is when I became profitable. So my style has kind of turned into this strange high risk where I aim for home runs, and I put about 10% of my portfolio in an account, and I do 20x. And if it's not a home run, it's a scalp, and sometimes it's a half liquidation on FTX, and sometimes it's a big loss. But the home runs pay for
offset it, right?
Pay for it. So my time frame ends up being between like 6 hours and like 5 days usually for trades.
Yeah, that makes sense. Yeah.
So the 5-minute chart, I've talked about this on stream, and maybe I should be corrected, but I don't like. I use the 5-minute chart and I have it open, but I trade on the hour. But the 5-minute, I don't look at the candles. I look at the volume. And
okay, I mean that makes so you should be using signals if that's the case, like because.
Okay, that's what I was going to ask. Because here's what I look for: is I wanted to see if you can give me an example of how I could see this on maybe the hour chart.
Okay.
The signals. I look for basically like if there's any sort of like market maker, like not professional market maker, but like manipulation intent. I look for large bursts of buys that are repeating, like slow sell-offs and then bursts of buys.
I look trying to ride that wave.
Yeah, exactly.
Right, I got you. Me and Brad. So, Brad, if you're still listening, like, don't you remember how long ago? I mean, that's so we had a similar strategy where we would be, we would basically wait for like, I don't want to say liquidations, but we would wait for like a mass stop out event and kind of ride that like in either direction. So yeah, I mean, you can definitely do that kind of, I mean, that's kind of the whole point of signals is to see that in real time. So go to low time frame and use it on signals. I'm talking about a composite chart. Like if you're, I mean, for what you're saying, it makes total sense. Like I get what you're doing. And, you know, we've been doing that for a very long time, you know, at least theorizing, you know, how to do that at scale with algos. So I know what you're talking about, makes sense. And you're like me. How old are you, dude, if you don't mind me asking?
I'm in my 30s, early 30s.
Okay, cool. Yeah, so you just started trading. I mean, so you're there. You're ready for like you're trying to go for the fucking throat. And I get it. Like, you know what I mean? It's but just keep in mind, man, like that if it sounds like you got your risk kind of well defined, but like oh man, I used to do this.
It's pretty intense.
It's intense, dude.
You're not sleeping much. You're
dude, you took the words out of my mouth. I mean, I used to have timers. I would take micro naps because I would literally have like I don't even know, like 17 different timers that would go off, and I would never sleep past. I mean, Brad can tell me I got so sick from this, like literally, like ulcers from this shit, bro. So like, you know, you really like you're new and you're fresh and you're gonna burn out doing this. So you have to like be very careful. And I'm not trying to say don't do it. I'm trying to say make sure you can go to bed, like you know what I mean, where you're not gonna like. It's the weirdest.
Like I shouldn't have a laptop next to my bed with Agritrade.
Exactly, dude.
Oh, okay.
Dude,
shit.
Exactly, dude. I'm sleeping next to I have 3 kids. My pregnant wife with my first child, right? With fucking alarms going off every 20 seconds because I was in these and this is before Bitcoin. This is like 2011, 12. Like, you know, right before I started getting heavy into this stuff. You know, just trading FX, not even Bitcoin. Like I'm talking like you want to talk about 20 LTV or 20x. I mean. Native leverage in Forex is 50, right? And that's like tame, very tame. So, you know, on 100x leverage, when you have like, you know, like a 30 lot trade on, that's 3 million units of one, of one currency on 100x. You know, you're talking like the thinnest of and this was before this we're older, we're in our 30s, so it's like this was before all this shit happened, the world's all blown up, like, you know, you would be able to put up a little bit of fucking margin and take on these crazy trades, and that's how you do it. You know, I'm not saying, listen, I've done it and it's not fun because like you said, you're sleeping with a laptop on your face. At one point I was still working on Wall Street, dude. It's not even a joke. I was working on Wall Street.
No, it's doing true.
This. It's fucked up, and it's like, you know, I was a head trader of this firm, and I lived in like, you know, in one of the boroughs of New York that was further away from the financial district. So like, you know, at a moment's notice, I got to be ready to freaking hop in my car and do 100 through the tunnel, you know, all this shit to get. So listen, I mean. Can you make tons of money? Absolutely. I mean, I've done it. I mean, you can also kiss your mental health goodbye. You can, you know, you could kiss, you know, sleeping goodbye if you have a wife or a partner or anything like that, or a husband. You know, you're probably gonna piss them off. So, I mean, again, this is a lifestyle. Like, it's not a hobby. So, you know, what you're saying is 100%. You know, I'm with you. I get it. It's you need balls, and you're not burned out yet. So you have the spryness to kind of, you know, dude. Trust me, man. Give it 10 years. Everything is cynical to you after 10 years of trading, bro. Like everything.
Oh, you should talk to Viador. He's your neighbor. He's in chat. He's your neighbor in New York. He's an old-time 80s trader, and that is one of the most cynical people I know.
Oh, dude, yes. I love floor traders from the 80s, dude. All of my buddies because I do some real estate investing also, and all my real estate buddies are these old time traders from the CBOT or like NYMEX or Comex, and they're the fucking funniest dudes. And they've all made so much money because being in the pits is awesome, and like you literally can just like front run everybody and just like you're killing it all day, and it's the easiest thing in the world. And like a lot of these dudes become very cynical because when you're screen trading and you're fucking, in a closet traders, right? You're by yourself. Like, that's why we have a group and we try to help people in our newsletter and all that bullshit. Because, we all my buddies, like my older buddies are floor traders that, are now in Bitcoin. They're in all these different markets. And, we realized years ago that we needed to get this organized. So, yeah, I mean, I totally, I get it. And, at the end of the day, for you, I would say definitely use a smaller time. If that's like your strategy and that's what you're looking for, then definitely, like, yeah, go to a low time frame. If you're looking for something specific, like, let's just out of fucking shits and giggles, but like, you go to something like, go to a 5 minute on like really small, like 100 or something.
And I'll say too, like, I'm aiming for like SFP type entries too. Like,
I get you.
I for these type of entries, and if it goes against, like, I'll know when it's going against me. I'll kind of have pretty wide validations too.
Right, exactly. So you're there. I totally understand what you're doing, and I it makes sense. So I'm gonna show you what I think would make a little bit of sense for you to look at. So here, like, you could switch it to overall volume, and kind of just, use it like that. And that's what I would do. I would just kind of keep it on volume. Yeah, and do that. Or you can maybe, depends on where you trade, whatever you want. Binance futures, whatever you want to do. And if you want to cycle between different exchanges to get an idea, because again, Signals is still free. So you can keep as many charts up at once as you want across time frames, pairs, exchanges, and just get, especially if you have like a wall of freaking monitors, you know what I mean? Just, that's kind of how I've seen early dudes that we've mentored and helped out do Signals, just a bunch of different time frames, charts. If you're really into intermarket stuff, the pump map is really cool too. I don't know if you guys have used this, but oh, what the heck is going on here?
I think we might have blown up your site. Too many people.
I think we're blowing the site up, Brad. Oh god. All right. Yeah. So pump map, we might have to really go back to that at another time, because we're definitely at have to be at mass scale here. Yeah. Look at this shit. All right. We weren't ready for this. We didn't think. Usually we get about like 3,000 people a month, uniques on our site, like that trade, like about 3,000 users, which is like 70% of our, or 80, almost 80% of our active users are active every month, So, we must have more than that on there right now. I don't know. But at the end of the day, yeah, I would say definitely cycle through time frames, low time frame for stuff like you're talking about, just on volume, and then like zoom in and get an idea, because you can see time price opportunities also. Like, that's kind of exactly what you're looking for. And if you want to get granular, go to the 1 minute, and then to keep it on even smaller time, like maybe a 50, and then from there you can look at this. Now you see, blowing it up. Yep. So essentially, yeah. So you'll see it. Look, these are the market makers you're talking about. Jesus Christ. All right.
I think this is a successful stream.
This might have been a successful stream. How many people do we got? We have 273. Wow, cool. Okay. Yeah. All right. Well, yeah, man. I mean, that's what I would do. I'm assuming we're probably out of curiosity. They can only see my what do you call it? I think I only shared the VC panel, which was the Signals thing. If I go to my analytics, they're gonna see that, or
in your stream settings, like you might have either pressed share window or share.
Yeah, there you go. It's all right. Well, I'll look at it later. This definitely has to be a crazy load right now, because we're definitely lagging a little bit. But that's good to know now. I'm glad it happened now, because at the end of the day, we're gonna have to up this bandwidth a little bit. I hope you guys found this, somewhat educational, and you decide to use our our service. It's free. We're not charging for it yet. We do offer paid upgrade for $50 a month, which gives you an alpha Discord where we share tons of information. every day. We mentor a bunch of traders. Also, on top of that, we have a private newsletter that goes out. Alpha newsletter goes out to the premium members. They also get videos, custom videos we drop to them. We do some live stuff through Twitch or whatever. Excuse me. And then going forward, it's $50 a month right now, and you're grandfathered in after that. At this point, going forward, Signals is going to become a tiered product. Not anytime soon. Continue using it as free. But we're going to incentivize people to use the premium because a lot of the time we get like these questions that we just can't keep up with, and you know what I mean. So it's good that we ran into this now. I'm glad you guys like seem to have a ton of people on there right now, so that's great. And continue to use it. It's free. It'll be free for the foreseeable future, and that's really that. If there's any other questions, I mean, I got some more time. I could definitely take a few more.
Ronnie is
let me ask one more thing. I think this is more towards your experience as a trader, and I think I try to answer this question for people, and it's really difficult. So we've kind of got like a couple types of people in the chat that watch, and we try to all learn together and everything. And there's some that are receptive to learning. Some just come in, are crabby, and they bitch about your position until you show your withdrawals, and then they stop talking. But most of the fact is these people have full-time jobs. They are trading about 10K or less balance. How do you think it's best for them to try to run up an account? Because they're all very serious in crypto. They're doing it all day.
Right.
What do you think?
All right. Well, that's a good question. So if you have like a 10K balance, and you're looking, again, like there's a lot of different ways you can do it. You want stable growth. I mean, there's a lot of ways you can get stable growth through APY, but you kind of have to know how to maneuver those markets, like with time, right? I don't know if you guys are into Wonderland at all, but like time. At one point, time was like 129 AVAX. Right? And now it's like 30. So, I mean, if you know how to flip in and out of that, you can multiply your net worth crazy. Because, like, all right, when I got in time originally was right after the release came out and Danny put everything out about the AVAX summer and the 180 million or whatever it was. And I just got right into time like, this is awesome. And it was relatively low TVL, which was somewhere around, I think, not even $1 billion at the time. And it was like 30 AVAX per time. And I bought like 2 of them. And then I just kept scaling in. And it went to like 130 AVAX. Dude, that's when you take your profits. Like, you know what I mean? In hindsight, unless you're really looking for stable growth, you just, turning 30 AVAX into 130 AVAX. And like, there was a time period where you can keep doing that and doing that and doing that. And like, if you knew how to get in and out, like stuff like that's easy. You can do, I mean, this is like kind of higher risk, but like, I mean, essentially, again, I don't want to say this is like financial advice. This is just stuff like as somebody objectively thinking how to maximize your net worth, and stretch it as far as you can to try to multiply it fast. I mean, I've gotten into NFTs, right? And right now is not the time. But I'm saying that little wave, and I think it's going to come back. There are projects out there right now that pay passive yield. Again, passive yield in this business is relatively new, and it's awesome because like if you want to grow stably and you know how to like kind of take your profits, the yield is great. NFT is kind of over right now. That was a great little run. So I would keep my eye on that market because once things start turning around, you get like an ETH 2.0 rollout or another like an AVAX or Luna or Solana really start to take over the share of. There's no good projects on those platforms right now. They're all centralized on Ethereum, unfortunately. A lot of them are cash grabs right now, so it's tough, but made a lot of money there. So, I mean, taking 0.1 ETH and turning it into fucking 30 ETH, like type of shit like that. So, I mean.
Sorry to interrupt. I think Frag was asking more about like starting a small trade balance and then
you mean like just
either way. The goal I think for a lot of our users is to eventually go full-time trader in some way. So
right. Yeah. Okay, so let's focus on that. That's just kind of like passive ways.
And here's the thing too. I'll say one more thing before. Most of these guys have full-time jobs that aren't trading. And like I had a full-time job that wasn't trading for a while, or at least I didn't work for a company like Tealstreet that you could trade while you worked, right? So it was so hard figuring out like entries and managing trades for the job and sleep and stuff. So like what type of trade should they look for? What type of leverage? Like
Swing
while
trades,
you're managing a full-time job.
Swing trades only. I had a full-time job for a long time, and all I did was swing trade because you're not going to be able to scout, man. I mean, if you're like, I'm in a ton of different Telegrams and Discords, and dudes have full-time jobs, and it's like, I just don't know how you do it. Like, I mean, I've done it. I've only ever worked in finance, so I really I was a TradFi guy for a while. Trading even while you're trying to trade for other people's hard because you're managing multiple positions. It's like, so if you're a guy at a desk at some company and like they're like stalking you, like making like time management their priority, like, yeah, it's going to be tough to like do anything but swing trade. And I wouldn't use leverage either, because how are you going to manage that? I mean, unless you have stops and you're really methodical with your risk process, and you just don't care if you get stopped, like, because it's also position management, right? So you kind of have to like be aware and abreast of the market. You can't just like set it and forget it. There's nothing. That's why I was, saying maybe something like, a passive APY play, or, aping into some. It's probably not the time for any of this stuff right now. We're late cycle. Like, I hate to say it, but we're pretty late cycle. We're facing rate hikes at this point. So if you want to take a 10K balance and 10 exit, 15 exit, I mean, what I would do is I would pick just one market, and get fucking awesome with it, and that's it. And that's what I did originally with S&P. I was trading too many markets, because I had clients and a book that I was managing for my firm, and I had to keep on top of that, but I also wanted to trade for myself, because like, you're taking these crazy trades, like why wouldn't you trade for yourself, right? So essentially, I was all over the place thinking like, well, this guy's in feeder cattles, he's killing it. This guy's in fucking frozen concentrated orange juice. This guy's in euros. This guy's in gold. You're going to spread yourself so thin, and you really at that point have to know a lot about Sharpe ratios and like portfolio composition, where it's impossible. So just pick one market that you really want to focus on all of your energy, get really, really, really good with that. Understand the price action, understand the order flow, understand support resistance, understand how that fucker trades like it's your every breath, right? And that's how you can start, because a lot of guys will probably stretch themselves too thin with a job, with life, with sleep. I don't sleep. I look like I you know what I mean? Like I'll go to bed random hours, wake up like the latest. Like if I go to bed at 7 a.m, I'll wake up by like 8:30, 9 o'clock, like just to get in front of the computer again for the open. Like, I don't know. And that's why most of the dudes that have been doing this 10, 15 years are not working full-time jobs. They have like their own companies or something, or they're working at a desk and doing something like that. Or they like I said, some guys just wake up and literally trade for a few minutes a day. They know what time of the day they want to trade, where there's the most volume, and that's it. So something like that, you have to quantify something like that. Do not stretch yourself thin. Not only don't stretch yourself thin, but death by 1,000 paper cuts, bro, sucks. And like, that's going to happen if you have a job and you have a life, and like, especially if like you're not a full-time trader and your significant other, a person you live with, doesn't get it. You know what I mean? You're not going to have a lot of time. Screen time is almost everything. Like I'm here legitimately 12 hours a day in front of the screen most of the time. Like, unless I'm out of the house or out of my office or out of wherever where I'm trading at that point or doing business, I mean, I'm in front of the screen. I have to be. I create content. You guys create content. You need screen time. You need to know what's going on. You need to be abreast of what's happening. So don't spread yourselves thin. Just take that 10 grand. Pick a market that you're really comfortable with, that you've had success with, and create a system. Like I said, I like to cycle through the hourly, 2 hour, 4 hour, then to the 12 or to the daily, 3-day, weekly. And I just do that. You don't really need to go to like the 3-day and the weekly very often, but at least, to the daily, from the hour to the daily, skipping over probably the 8 and 12. You can go through it if you want. Excuse me. Excuse me. But at the end of the day, that's what I would say. Pick a market. Don't get crazy with it. Don't get cute. Try to make, and also like I hate to say like setting price or profit goals, like, because like when you try to make that goal, it's almost like you psych yourself out. You know what I mean? So just try to be positive at the end of the day, or at the end of the week. Try to have a positive P&L. Do everything you can to just like make sure your balances are positive, even if it's by a tenth of a percent. Not even a bip. Do whatever you have to do, right, to make sure you're profitable at the end of the week. Keep stacking profitable days. Keep stacking screen time, and at the end of the day, ask questions and just always find somebody that knows more than you and listen to them, right? They're not telling you things that you don't want to hear on purpose. Like, you know what I mean? They're telling you things because you're going to learn these things no matter what. And if you can, and I've mentored a lot of people. So at the end of the day, I would say find a mentor, or if you don't have the ability to find a mentor, just keep stacking positive days in one market and then learn that shit like it's the back of your hand. And that's really what I did. I decided to only trade yen for a while when I was, making the transition from only yen. And why? Yen is the most safe haven currency in the world. Like even when the dollar tanks, the yen's going up. So with the world being as weird as it is right now, like, even back then, it was a market that I was very, very comfortable trading because we always traded 6J futures. We always traded dollar yen, pound yen, euro yen, whatever. You know what I mean? So I was very comfortable with it. And that's how I lived for a while until I got, established in Bitcoin and I got myself going. So, yeah, that's what I would say.
Awesome. Okay, so do you look for algos through your software? Like people running algos?
Oh yeah, I mean it's pretty clear. I mean in terms of algos, like how you spot them, it's like it's not the easiest thing to do. You kind of need some screen time. You kind of have to know what you're looking for.
Okay.
But
could I ask you? We'll get specific if you don't mind. I just have a question. If you've noticed a specific one in the last 2 months, it's about 2 to 3 hours before daily open.
So there's a lot of those. Yeah, there are a lot of those.
But the volatility shuts down for the first 2 to 3 hours before daily open. Have you ever noticed that one?
So there's a lot of different. That one, what UTC are you looking at? Like what time UTC? Do you know?
My daily open is 7 Eastern your time.
7 Eastern? Yeah. Okay.
Yeah. So 2 to 3 hours before that, it's you'll notice that if you look at a tick chart or AgriTrade, it just gets smooth and it's no longer very human-like. It's very
you know why?
suppressed.
You know why, right? You know why?
No,
so
I'm asking.
No, I know. I'm sorry. That's it. You don't know me. It's all right.
No, I get you. It's a joke. I'm joking too.
No, I know. So New York. Yeah, it's how we talk. I'm sorry. So basically, all right. This is my opinion, but this is what I've seen over the long haul is that there's different sessions happening, right? Like the close UTC happens right before Asia, right after the S&P closes, sometime in that little Netherland hour where no one's around eating dinner, doing whatever they're doing. And then you get into the Asia session right around the late evening, the nighttime going into the wee hours. And then right around the time you're talking about, Europe comes online. So Europe's online at that time. FX markets fuck up at that time. Everything fucks up at that time. And it's because London's opening and everything's opening, and you mix all that volume together with Asia, and you have what's essentially almost, and this doesn't exist in Bitcoin because, and me and Brad we've theorized a lot about the stuff you're talking about here, and there's usually an opening drive and initial balance in markets where you get that first 10-minute, 15-minute window, the opening drive, you get the books and the algos going crazy and shit like that. And then the next 45 minutes is the initial balance where you get that balance of all that. So I think that's what is happening there, especially because it's coinciding with a time that when Brad lived in LA, it used to be around his time, 12 p.m. or 12 a.m. in LA. So I believe so, Brad, if I'm not mistaken. I don't know if you're still listening. But I mean, at the end of the day, I would have to imagine that's why, because you're getting all of these intermarket forces opening in another location, and you're getting that crossover from one session to another, and them kind of gelling together. So yeah, I mean that happens a lot. You'll see it probably also right around the open and close of New York, especially day trader margins around 8:30 when 8:30 margins kick in and stuff like that. It's a little bit of fuckery, but yeah, I mean a lot of that stuff has to do with just market forces that are coming online at that time. They were dormant, and then you get that volatility essentially the cleanse where, you get that crazy vol and then it just dies and go into initial balance and you find your, I guess your for me it would be like overnight levels. You know what I mean? Where I'm looking, if I'm trading the S&P, like you always look at overnight and Globex and all this stuff and get an idea of what happened before you were awake, and then try to build a thesis off that. And usually on signals, you'll see it as MPOCs, you'll see it as UFAs on smaller time frame. And if you want to get real granular, you can get down to it's like the 5 minute, or the 1 minute, and just kind of have an idea of, what's happening at any given time. So, yeah, I mean, that makes sense. I mean, we've seen that for years. It's definitely, a lot of different things I play, but a lot of times it's just sessions crossing over and things like that.
Interesting. Okay. Yeah, I've always wondered. I thought it was like quite a recent occurrence. It's pretty obvious when it happens too.
It changes a lot too. It's not. It sounds like it would be, if it's 7 your time and it's 3 hours, I'd go back to about 4, which is right around the time that UK really heats up. If you want, I don't know if you have like a traditional like Forex platform or futures platform where you can view futures and Forex. Look at that time. Go to like 4 a.m. kind of where that like on whatever kind of chart, like a smaller time frame chart. Go to like maybe an hourly chart, and you'll see around that time things start getting crazy, and it's because of the crossover. So it happens in FX, it happens in futures. You get more volume at that point, and then things kind of start spilling over into other markets. It usually always starts in FX though. So yeah, it makes sense. It used to be, I think, much earlier than that, where we tried to stay awake for a while to kind of catch it. And we tried to define what the opening balance and initial drive would look like, or excuse me, the opening drive and initial balance would look like, but we never got very far with it because it always kept changing. So, and it was never within our defined, I guess within our definition of what we were looking for. So it never really took shape. But I mean, that was also 3-4 years ago. So as like the market matures, you get more institutionals and all that. Yeah, makes sense for sure.
Okay. Ronnie, did you have any questions?
Ronnie's like our resident auction theory expert.
Awesome.
No, first and foremost, I just want to say that everything that you presented us today has been great. And
thank you. Thank you.
I've been following along with, every single piece of information that you've said, and I agree with pretty much all of it.
Right.
I did have some questions coming back to your platform, though.
Sure.
I mean, aside from, the psychology of things and things like that, in terms of your platform and signals that you've created, I guess my initial question, just for my understanding, is on the right, you have like, I'm assuming that's like a volume profile.
Yeah, right.
And when I cycle through it, how would say, this is my first time looking at it, how would I understand which one's which? Would I have to go to the Discord or?
So, yeah, I mean, we have a video on YouTube about it. We're actually going to clean it up a little bit because it's like 3 years old now almost. And we've had some feedback that it was kind of like we tried to cover too much. It was right as we were starting. So I'm going to probably clean that up a little bit because I'm a profile trader. That's how I trade. So you cycle through. So the blue, I hope we don't crash because we have so many people right now. So if you keep cycling through delta profile, the split, just overall volume, there's no split at all in terms of cumulative delta, overall volume, buy, sell, just the overall volume. And then here is buy, sell, split. So it's simple. Yeah, really simple. Like nothing like fancy or anything like that. Just very basic stuff. But the value of it is that because Bitcoin, and I'm sure you understand it, because Bitcoin's 24/7 by 365, there's so many data points that you have to keep that you have to keep on top of in order to display that that profile accurately, right? Because like 100%. You get right. So that we tried not to get too fancy in our current iteration, just to keep it, usable for people that are entry level or intermediate type guys to understand it, feel comfortable. Yeah.
No, and I totally agree with that because coming from looking at EXO every single day for hours on end, this is something that's very simple for someone that's fresh, still looking to understand how and how to navigate footprints and navigate the different types of profiles. The second thing I wanted to ask is in terms of in terms of integrations. Well, I guess not integrations, but any things you guys have planned in the future to add on to here, like
Sure.
whether it be open interest or
Oh, absolutely.
TPO,
Yep. It's
things
funny
like
you said
that.
TPOs, man. Brad, I'm glad Brad's listening because, like,
Yeah.
dude, we're still stealth, right? And I'm
Right.
glad you brought this up. So, like, we're not fully released. We're in beta. We went from 0 page views, not even a year ago to like,
Mhm.
30,000 times that. So essentially, we're still getting a feel. Like, we've never deviated or tried to compete with like any other charting system, a trading view, anything. We knew the value that we delivered was going to be, like you said, in the profile, the order flow, and the ultimately the to read, kind of like you're saying, the crosses, and to teach people how to read order flow for Bitcoin, right? So,
Yeah.
yeah, so we're definitely going to do a TPO thing. That was one of my things that I wanted for a very long time, because it's how I like you know what I mean? Like, it feels comfortable to me. One thing I will tell you though, we're gonna deliver it in a much better way than a lot of these other guys do, and I can't get really more into specifics than
No,
that.
that's fine. Yeah.
Yeah, it's gonna be like an upper, right, where you just kind of click through. It's gonna feel real pretty, real nice. It's not gonna feel bulky. It's gonna be very, very easy to read, and we're gonna make sure that we do another something like this to put it out there once we do. Liquidations is in the works as well. We're gonna display that uniquely as well. I can't really get into how we're gonna display it just because, like, I don't know who's listening, but
No, you're
yeah, and
I just
then
wanted to mainly ask, like, because one of the biggest things that I've come across is, there's so many different platforms that provide various different things, right? Like when I first started and I got into, auction theory and footprints, like I was
right,
using 3 or 4 different sites
makes sense. Yeah,
just to like for my methodology, right? Like for
right,
my triggers and what I'm looking for in that day to day. And then, I found a couple platforms that kind of combine certain things,
right.
but it's still like I'm looking at various different places. And
Yep.
I'm not saying that, you're going to be the one to resolve that, but like
That's what we're
um
going for, my friend. I totally hear you loud and clear. And you know what? Like, that's the point of signals, is because, we kept it very quiet from 2019
yeah,
to the, sometime in 2020, and just took feedback from higher level guys like you guys, like, other, just anybody that
yeah,
would, give us the feedback, because we wanted to know, okay, does it feel native to you? Do you feel good using this? Like, what's wrong? What doesn't feel, what feels bulky, what feels broken? And like you said, you had to go to, at one point, all these different sites to kind of bring everything together. We're also completely 100% bootstrapped. We have zero
yeah,
funding, like zero. Okay, we make money every month from trading and from, the newsletter and all the other shit we do. But at the end of the day, we have zero money that we've raised. So, Brad, again, the kid's a beast, and we have a lot of stuff already coded out for us where it's not public yet. But yeah, we do aim to solve. I know exactly what you're saying, and believe me, man. I mean, if we've also been through, we're serial entrepreneurs. Like, we've raised money. We don't want to deal with these guys anymore. We don't want to answer to anybody. We don't want somebody telling us about a product in a market we know, essentially, not to pat ourselves on the back, but Brad's an AI genius. I've been trading 15 years. I don't want some VC telling me this isn't right when I know he's wrong. So that's why we're kind of slow at integrating everything, because we're literally doing it all ourselves. There's only 2 people, and that's it. So we don't have employees, we don't have anything, and this is our livelihood. So at the end of the day, we want to get it right, and we want to make sure that it's well, I don't want to say research, but it's well tested before we put it out publicly. But I know exactly what you're saying, and I know the people and the sites and all the stuff you're alluding to, because I stalk them like they're probably stalking us. So yeah, no, give it half to 22. You're going to see Signals 2.0. We've been alluding to this in our Discord also. It's coming. So yeah, pretty soon you're not going to have to venture too far, my friend.
okay, yeah. I mean that makes a lot of sense. And the only other comment or question that I really have is,
Sure.
in terms of when it comes to cycling through like the different I just blanked out here. Yeah, for the DOM, right? Like
Yeah.
when it comes to the DOM, is there a way to, like, I guess, show more there, or is this the
It's
only setting
coming.
you have to do?
It's
Okay.
coming. I promise you, it's coming. I'm glad at least you guys are asking this stuff, because it makes me feel so much better because, like, we've been privately having these conversations anyway. Literally everything you're saying. So if I'm assuming Brad is still listening, that's awesome that, everything we've theorized and kind of like gamed out is should, knock on wood, be well received. So yeah, I mean, as of right now, unfortunately, it's kind of just what you're seeing in the middle is the resting orders and cancel replace is coming in over here, and then you'll start to see these things move a little bit as volume comes in and out. I think maybe I'm going to do a video on YouTube and I'll send it to you guys along with like trading from the gut, the stuff the books that I've read, so you can maybe share it with your group and explain a little bit more, because like again, you're right, like the Dom is in this iteration. My goal is to have a full, like, you ever trade with Jigsaw and like those things that go over Ninja, like these Dom layovers that go over Ninja and stuff like that?
No, I haven't. I've used Quant Seller.
All right, we're gonna do something like that. We have a really good idea of what we want to do with that, and it's gonna be like you can actually like cycle through it and trade off it. So it's coming. Right now, this is just to show you where resting orders are, cancel replaces, and it kind of gives you an idea in high liquidity, or excuse me, high volatility. And like as liquidity is changing hands very fast, it kind of gives you an idea of where algos are capping price and stuff like that. Because a lot of times algos will spoof you, and that's why I never understood like order book, like specific traders that are just like, oh, the order book this, the order book that. It's all 90% bullshit. So at the end of the day, we know that, that we just want to kind of make it so that going forward you have a better way to use it, and actually, because I'm sure you've Dom scalped and done stuff like that, in whatever market you traded. So, I mean, after a certain point, you get very familiar with trading off the Dom, and you get very, you get comfortable where, so yeah, it's coming. I don't want to get too into it, but yeah, all of this stuff is definitely coming. And I appreciate the question and giving me the opportunity to put it out there publicly.
Yeah, no, for sure. I mean, and the biggest thing that like I took away from, listening into this and looking at what is being presented here is that it's very easy to read for like coming back from like, sometimes like with the different settings and the different like things that are available to you, like me, for example, I often find myself like if I'm creating a template or if I create something, I'll often like get too knee deep into it where then like, I'm looking to clean things up and make it more simplified.
Right. That's right. That's why
and it happens
signals,
like, whether it's every 3 months, whether it's every 6 months or
100%.
However it goes about. But it's like looking at something like this, it's like very easily presented. Like, okay, I know where my imbalances are. I see my delta at the bottom. Like very clean. I can switch through really fast.
Right. That's exactly why we did it this way, to make it as simple as possible.
NPOCs and like POC, like the UFAs, like like the unfinished auctions are there.
And we're one of the only people that display that for you know what I mean. So if you're talking about going to different sites, that's why. And I hate to cut you off. My brain just goes, it doesn't stop. So it's like at this point, give it, like I said, 6 months. You're not going to be going to all these other sites anymore. And I'm telling you, like, we're going to keep it free for as long as humanly possible as well. We don't want to charge anybody. We were very, fortunate to be in the position we're in, and we grinded really hard to get the feedback. One thing that I noticed is we're definitely have to up our bandwidth after doing stuff like this. I wasn't ready for the jump in users we got. I checked the analytics, but I mean, definitely I'd say like before the 4th of July, right after the 4th of July, all this stuff is going to be nice and cleaned up, and it's not going to be anything other than what you're seeing. The whole thing, like Brad's a coder. He's built very successful software in the past, and he knows how to kind of like maximize your space and kind of make everything very user friendly. And I got to give him credit because like he kept us on this trajectory in terms of like not getting too pretty or too over the top to make it too, like, just make it so people understand and that they can be educated. And then from there, now we're going to start adding a little bit more so that guys like you or whoever else that are a little bit more seasoned will come in and be like, okay, this is, instead of going to this site, and I can just stay here and I just ask the questions in the Discord if I need to. So yeah, I mean, it's I'm glad you said that, man. Like, it makes me feel good, only because like we tried really hard to like make it so that anybody can use it. And I know it looks daunting at first because like guys are used to trading a certain way, or But trust me, I mean, over time, I'm sure you can agree, as opposed to looking at a strict composite chart, you would want to know, like you said, where the NPOCs are, where UFA is, you want to know where buy and sell imbalances. You're never going to get that on a candlestick chart. You're not.
Yeah, for sure. And the other thing is, like, one of the things that I like the most is the UFA piece, right? Because most people, even when you're looking at just straight TPO, like, the only time you're gonna know when there's an unfinished auctions if you like know what a buying and
exactly. Yep. But that's exactly it. That's why we did it this way, because like, what guy is gonna look at a chart and like then again, like UFA and stuff like that, a lot of times like dudes like try to make it open to interpretation and stuff, and it's not that, so we get a lot of questions about this, which is why we did the YouTube video, and I wanted had the opportunity offered to me to come on here and clean it, kind of like just throw this stuff out there. I mean, if you're looking for, again, like if you're trading on a traditional composite chart and you're you're a technician, you know what you're looking for, great, no problem. Okay. Yeah. But a lot of guys don't know what they're looking for, and if you're able to educate them on why there's an NPOC there and why there's a UFA there and why there are imbalances and they all kind of line up in the same area, and then you're like, okay, now go look at a 4-hour chart with this Fibonacci on.
Yeah, the confluence is there.
Right, exactly. It's all harmonic, all right? So this tells you before the confirmation, which is, again, lagging on that chart, that correct. This is where you need to be trading. And like we said originally, you go through the time frames, you go through the price steps, you go through the TPOs and where all the, there may be confluence and imbalance or whatever, and you kind of piece it all together. And trading doesn't have to be hard. Like, people make this shit so hard. It's like, I mean, it's not easy, but it's not hard either. It's like the simpler you keep it, the better results you're going to have. It's like these dudes that try to like look for any edge on any time frame with any market. It's like, dude, I don't know how you live. Like, because I have like anxiety just, keeping my edge in Bitcoin or ETH or whatever, like AVAX. Like, it's hard. You just, the simpler you keep it, the less convoluted you make your trading system. And 100%. It really comes down to risk management. That's really it. I mean, half of trading is position and risk management.
Yeah, risk management, and then your own psychology, right? Like, you can.
Well, right.
Things you guys mentioned was right. Like, when it comes to gambling, like know when to get out, right? Know when the market is going against you, and like even if you're scalping, right? It's like one of the things that you were talking about your friend and how he looks for reactions. Like, I do the same thing, right? If a move doesn't respond in a certain manner, it's like, okay, I'd rather get out, and if it does eventually, like, I can get back in. It's no problem.
Because a lot of people, I hate to say that, it's like it's this pride thing, like being right. Like, they don't want to make money, they want to be right. Like, it's clout. It's like, I've never understood the clout shit. It's like, do you want to make money or do you want to be right? It's like, I don't. It's like when you when you detach that, like, money from clout. I mean, because most of the Bitcoiners that the richest whales ever, you don't even know who they are. They're not on Twitter. They're not farming clout, or they don't have a Discord or anything like that. I don't care. Like, you know what I mean? So I mean,
I was just gonna say the difference between, like, looking at signals or looking at charts in this manner versus looking at composite charts is that it helps you a lot with execution, and that's what helps you differ between being right and then looking to make money, right? Because you could be right and have poor execution and lose.
That's 100% correct.
Being versus having better execution, even if you're biased and if you're like kind of on the edge, but as long as you're
biased,
in a place where you have like solid validation where it's like easy, that's how you make it easier for yourself. And looking at a chart like this and having it clean like this is what I look for in terms of like, okay, this is clean, it's easy to read, my execution can be, really good, and I don't have to have a crazy win rate, but I can still be profitable at the end of the day.
Right. And you know what? At the end of the day, bulls make money, bears make money, but pigs get slaughtered, man. And like, that's just how it goes. And that's the adage. I hate to say it, like, it's corny, but like, these Wall Street adages, they all ring through time, man. They started in the 1800s and they're still valid today for a reason, right? So like you said, I mean, it's all about execution. Like, you don't want to like put guesswork into this. Like, the point of screen time is to take the guesswork out of it, where it's like you're literally sitting on a 7 out of 10 probability at this execution level. You might have to wait for it, right? But this execution level is a 7 out of 10, and that's a 70% probability that you're gonna win this trade, and then managing it, right? Oh, it's not working. That's the 30%, right? Take the trade off the table. It's that simple. There's nothing. Forget being right. I don't care about being right. I care about making money. Okay, like that's anybody that does this professionally. You talk to traders, they have no ego. It's like you can't have an ego. It's like, because once you think you're the baddest trader, oh my God, you're a pleb. Okay, that's when you're gonna have that 50-60% drawdown. Like, you know what I mean? There's no exception. So you're right. It's all about execution. Keeping it simple is why keeping it the way we kept it is to essentially enhance our execution and not overcomplicate it. You don't need 1,000 indicators. I love these dudes. When my first startup, long story short, had a kid that was a coder for me, and he was not a trader. He was a coder, and he tried to throw thousands of indicators and TA lib onto some project we were working on. Like, dude, go home. Like, you know what I mean? Like, you're not listening. So, definitely don't overcomplicate it. I only use Composite for confirmation of things I see on signals, and that's kind of what I think. What we're going for in the long term is educating our people and whoever is interested in this type of stuff to kind of use this as a crutch in the interim, and then all your bias can be confirmed or denied by a longer run composite, higher time frame composite.
Yeah, no, I agree, and I appreciate you taking the time to answer my questions.
Nah, of course, man. I'm glad for to have the opportunity, for sure.
Yeah. Other than that, I don't have anything else that I wanted to further ask Lat. I don't know if you want to take some questions for the chat or.
Yeah, let's grab like 3 questions from the chat. I could do like 3 questions right now, and then we'll we'll hop off.
Yeah, it's been like 2 hours of your time. So
hey, listen, this is when you talk shop, man. So I was able to clear a bunch off. So we got about 10 more minutes we can do.
Okay, cool. Yeah. So anyone in the chat, feel free to ask some questions, whether it be related to signals, trading, day trading, not getting liquidated, or risk management, trading psychology.
Risk management, things like that.
Don't
blow up your whole portfolio.
Ego is the enemy. Yes, it is. Shorting 5250K. Okay. I mean, that's definitely, we went over that. Keep that risk tight. John Brown from FitFinex is on Twitter. Nodders. Okay. Don't know what that means. Yeah, I mean, I don't see really any I mean, if you guys see anything that's worthwhile in there, it seems like Brad's in there still, kind of like taking care of some shit. Yeah. So
he was answering questions. Yeah.
One thing I just noticed is there was a UFA just now that we went into.
Yep.
And price bounced off of it, right? And it's like you can you would have been able to see that very clearly on signals versus somewhere else.
Yeah. Absolutely, and that's what we trade for, is the bounds, right? Like, I mean, you trade profile, so you understand what I'm saying. It's like you trade value, you trade like value breaks, unless you're getting like a rotation, like a serious rotation. You trade value, the edges of the profile, and that's literally as simple as I can make it. Like, there's nothing simple. I don't even really look at the clusters that much, to be honest with you, at this point. I literally know, based on symmetry, where my probabilities are, and this profile, the way Brad set it up, the profile lines up with TPOs. So and once we put the full TPO map out there, it's going to get even better. So at the end, and he's got a specific system for that I can't get into, but it's going to be something that you've probably never seen before. It's going to be super pretty. And at the end of the day, that's really we trade the edges. And we always say, like, when you see a trending market going in one direction, and you get an NPOC, usually you'll get the NPOC or the UFA. It'll start like blipping back and forth, like it's setting itself up, and then you get that reversal. So that's kind of what we look for. I mean, without like getting crazy into detail, just look for that stuff. Look for it forming. Look for it testing. There's never a triple top, right? It's always like you're going to see a test, a retest, and then it's either going to move to it or from it. And that's the beauty of auction theory, and it kind of gives you the psychology of what people are thinking at certain TPOs, where it's like, okay, 100%. Right? Okay, so so that's yeah, I mean, you're right. Yeah, that's you see it there first, and you that's why I keep saying it. Like, I hate to I like TradingView because I use it for pretty much, besides like interactive brokers and other shit. Like, I use it for pretty much everything. So for composite, but I never deviate from a daily chart ever. So I mean that I'm with you. I mean, trading the edges of value. If you're you have a small portfolio size that you want to listen. I've seen $0 get turned into $1 million. Okay, like it can happen. You can start with nothing and turn it into $1 million. You have to be dedicated risk wise, and if you really, really, really want to do it, and you want your highest probability trades, you have to sit on your hands. You have to. Like trades come to you. It's like fishing. You sit there and wait, and you know where your edges are. You know where your essentially where your probabilities are. It's about finding probabilities. And a lot of the times it's like you said, at the edges of the profile, and you sit there and wait, and it may not be an everyday trade, but if you're a swing trader with 10K and it's like, if I blow this up, I'm fucked, like that's probably the way to do it, you know?
Yeah, patience for those high probability trades is going to pay off versus like trying to scalp and hoping to turn those into home runs. Like,
right. 100%.
Like I got to a point just a couple months ago where I got burnt out scalping. Like I wasn't sleeping, and to the point where I'm just like looking at the screen and I was like, I don't know if this is going up or if this is going down anymore.
That's why. That's when you need. So there's always like the other adage on Wall Street: when you get to 85% mental clarity, it's time to take a break. Like you need to step away from the screen for a week. Just change your scenery. Like I'm not saying step away for a month, but like if you have the ability to go away for a couple of days, go to for me, it's like we live in New York, go right to Atlantic City, go to Maryland in the summer, Virginia, like Florida, just disappear for a week and come back, and you'll feel better and your brain will be cleared up. It's also like cyclical. Markets are cyclical, so you got to know when, like we reported in our premium the whole 3Q and the whole end of 2Q, like don't trade, like just don't fucking trade, like just take longer run positions, don't trade, because you're gonna get blown up. And sure enough, how much volatility do we get? You know what I mean? And then right after wasn't really Jackson Hole, I guess it was kind of like right after that September Fed meeting, you got all that volatility, and then you got the move, right? So that's kind of another thing. Just sit tight. Take it easy. You start to feel your mental clarity, like you said, because I was with you, bro. I got ulcers from this shit in 2017. Because like I said, I like the whole, 19K to 3K, and I'm not saying like it bothered me where I was like, yeah, I was down millions of dollars, but like, I mean, it kind of like, it didn't bother me like that. It bothered me that people were such like pussies about it. Like, you know what I mean? It's like, really? Like, I mean, this isn't that serious. Like there's miners capitulating, like farms, not miners, like farms of miners capitulating. And it's just like, I knew like we were close to the bottom, but it didn't feel like it. And
it never does.
Right. That's what it was. It felt close, but me getting that mad was the bottom, because I never get mad. So you kind of, you know what I mean? You kind of just have to know your limits of don't burn yourself out trying to make money, because money is for sure. I can tell you 100% definitively it's not worth it. It's not. It's never enough anyway. You have millions, 10 million, 20 million. It's not enough. So why are you getting mad about $500? Just chill out, take a nap, turn the screen off. We've been there. We're telling you from experience, like don't do it. So,
No, yeah, I agree. I agree with that.
And it seems like none of your guys don't really have any questions.
All right. Okay, I guess you're good. Sorry about that.
Yeah, no problem. So yeah, we're going to give away a month of our premium just so you guys can see. We've gone over this already. Catalysts and inflection points. I'm very nervous about a rate hike right now, only because historically you will see that, like I've said, even a hint will take us 50% down. So it may be different this time, might be more orderly, not so much of a cascade waterfall type of event, but nonetheless, if we don't get that hint in January, and again, I think we're going to rotate through 51, which we're already almost there right now. As we've been talking, everything we were saying is happening. So it's like, we're rotating through 51, 52. We're having some trouble. I saw a dude in there saying they're going to short 52, 53. I didn't tell you to do that. Just understand, like, the thesis is that, you know what I mean? Is that I see this becoming maybe more of a staunch stop before we hit 57K resistance, and then ultimately are able to try to take out the highs in the 60s, in the low to mid. So, in the beginning of the year, if we don't, I think we might get a sick run in the beginning of January, kind of like in 2017. Like Yellen hinted at a rate hike in 2017 in January. That coincided with the top of the market, right? That along with CME futures coincided with the top of the market, because you had more professionals and locals come in and kind of like bully people a little bit. So, and especially because people don't understand intermarket risk very well. So that's a catalyst. Yeah. If we don't get that in January, we continue to run probably. And I think we're going to probably cross 70. Watch 70, 71. That's really the catalyst right now. If we can't rotate through that, that's the last level I have on my composite chart from 2017, and ultimately the only one that really matters at this point because we can't touch it. And it's like every time we try, there's just an abundance of sellers that come out of nowhere, and you'll see these dots up here just start going crazy red, and it's it. I mean, we've had a lot of, but then you get these events where they start to pull back. You know what I mean? They start to take all the they lift the ask for themselves. They kind of just raise it up a little bit and let it melt up. So it's hard to really say because again, it all comes down to like you have to think like them now. You know what I mean? And you kind of have to. Everything is about thinking as the other person. You're long. If I was short at size, where would I be short? Why would I be short? Why here? Why there? Why am I not getting through this level? I mean, it's hard to quantify one specific thing, but the biggest thing I'm looking for is a rotation through 71. If we can't get through 71, especially by January, and if they hint at rates at all, man, it's gonna get dicey. So make sure you're watching out for that January FOMC meeting, the March one. You know, our friend Papa J Powell is probably going to have to admit that inflation is not, coming back in line with, not that they already dropped transitory, but, they've already hinted at, we put this out before it even happened that they were going to taper faster into March. And then theoretically you get a March. No one's expecting a 100 basis point rate hike in March off the rip, but historically it's happened. In 2017 it happened. Okay, so you can get a 100 basis point rate hike out of nowhere, and then 25, 50, 50 to 2.5. The market's cooked at that point. So yeah, that's kind of what I'm looking for. And then those dips are the ones you got to buy. So
cool.
Yeah, man. If there's anything else, any other questions from your from your audience? I take one more. We'll wrap it up.
Maybe one more question from the chat.
Anybody? I know Brad's been kind of answering stuff. I peeped in there and saw him a little bit, so not sure if he's been taking care of everything. But if anyone else wants to ask something, just don't forget. We're gonna give out a month of our premium. I'll talk to you guys. You just pick whoever, and then we'll set it up with you guys.
Sure.
And if you if you haven't been to the Substack, again, it's $50 a month. That price is gonna go up. But you're grandfathered in as of today if you get that because we're giving it out through you guys. So again, private Discord channel where we mentor people, we help them trade, we any question, literally morning, noon, night, it's answered within as soon as I see it, it's answered. And people can attest to that. And then on top of that, we give a bunch of literature every month that's written out. It's like high level of stuff. It's not basic stuff. It's high level. And then we have videos as well and streams. So $50 a month. It's signals signals.substack.com. You can sign up for the free newsletter. Just keep in mind that it's delayed weeks at a time, and you're going to be looking at stuff that's probably 2 months behind the current stuff. So, that's pretty much all I've got. And yeah, man, I'm just really appreciative for you guys giving me the opportunity to talk to your people.
Yeah, I definitely appreciate you coming on and talking, answering so many questions, going over your platform, and
yeah, man,
definitely
absolutely
appreciate it. And
anytime, yeah.
Yeah, if you want to do this again sometime, let me know.
Yeah, I mean, I'm sure we will, especially because you guys, you pretty much you gave me even your group, you gave me a lot of stuff that we're working on already and stuff that we've always kind of thought to ourselves, I hope people appreciate why we did this or why we're doing that. And, I really do appreciate the feedback, to be honest. And as soon as we're ready to, kind of announce a little bit more stuff, or even if start after the new year when, after the rate hikes or lack thereof start to materialize, we can talk a little bit more about intermarket stuff. So I'll definitely be back. We'll keep in touch.
Yeah, that sounds great.
Thank you,
guys. Yeah, of course, man. I hope you guys have happy holidays. Again, signals.substack.com, signals.io. And you can hop in the Discord, our YouTube as well, whatever. And we try to educate however we can.
Awesome. And check out Tealstreet.io as well. That's
sir.
That's our
I'm gonna
platform.
100%. I'm gonna show it to my people in the newsletter too.
Awesome.
Yes, sir. Sweet. All right, guys.
Collaborative shilling.
Yes, it is. I love it. Keep the network is what keeps it all together, right? So
absolutely.
All right, great guys. Happy holidays. Look forward to speaking to you guys again. And I'll be in touch with you so you can pick a person from your viewers, and we'll give them a month for free.
Sweet.
Yeah, if you want to stick around in the chat, we'll there's a game we play, and you'll see who wins.
Okay,
marbles.
Cool. All right,
gonna do marbles.
Yeah, I want to do marbles.
Okay, cool. Yeah, I'll stick around for that.
Cool. Thanks, man.
Yeah, no problem, guys.
Appreciate it.
Yes, sir. Have a good day, guys.